The focus for today, which is Axis Bank, right? We've seen considerable selling across the board in the banking pack. Initially, you saw quite a substantial cut in Axis Bank as well on the back of Q3 results, but it's recovered ground to a certain extent. It was down about 6% at one point. But looking at the numbers, one didn't see something that was so terrible that would justify a 6% fall.
Right. It does look like net profit didn't meet marginally just by a slight, it was a slight miss on estimates. So net profit rose 3.7% year on year to 6,071 crore. Even the core income, that is the net interest income, was up 9%. So quite a considerable jump there as well. And however, the operating expenses weighed on net profits. If you look at operating expenses that were up 32% this year, and a part of that was on account of integration with Citigroup India. So it seems like it's a one-time or a short-term kind of a cost. But overall, it seems like an okay performance, not bad, not as bad as how markets have reacted. But let's get in our guests and get his view as well. We have Saurabh Jain. Saurabh, on Axis Bank, looking at the results, looks quite decent, but markets are reacting very sharply to this. Could you tell us a little bit more about why that is happening?
Hi, good morning. I think there is a lot of pessimism in the markets. You know, we are seeing mixed set of numbers coming from all the sectors. For example, IT, banking. The way the HDFC disappointed, I think that is coming to the investors' mind. Slight disappointment is leading to a huge fall. I think some kind of a sanity should revert back in the market. I think it is the opportunity for the long-term investor to chip in, because they are actually getting Axis Bank at a 5%, 6% discount. I mean, from the this kind of a selling is actually a good opportunity for the long-term investors. Overall, the numbers were cool. They were good, and I think the positive surprises may are on the anvil because of the credit disbursement which usually happen in the March quarter. I think March quarter numbers will be much better.
All right. Let's jump into the questions now. The first one is from Vaibhav Kohli. He's writing to us on YouTube. He's talking about IRFC. It's touched a 52-week high today, and he wants to know if he should wait before buying this stock. Do you see value in this stock, Saurabh? And I'll take a short-term view on this as well.
Say, you don't find merit in buying IRFC considering the valuation at which it is trading. I mean, it is a good company, growing at a good growth at a good pace, but at the same time, at the price which you are paying is too. I think on the valuation side, it is too pricey. So, in my sense, I think it is better to avoid.
And Swati, what would you suggest for the shorter term? Should they wait before buying into the stock?
Yes, we have seen a very good rally from almost 100 levels to 192 levels, and the stock has given a steep rally. From that levels, we cannot deny the profit booking. I believe one can buy at the current market price, but one should wait for any dips towards to 120 to 130 level. That will be a good opportunity to take a buy call, because risk reward ratio is not favorable at the CMP. But those who don't want to miss this kind of a rally, at least take a 20 to 30% buying position at the CMP and wait for any dips towards to 130 level. I believe the stock is on the formation of the flag pattern, and once it manages to give a breakout of 175 levels on the higher side, the stock is likely to climb the rally up to 240 to 250 levels. So it's a buy, but buy on the deep strategy should be implied in this particular counter.
Okay. This is now I'm asking this sort of with the hope that you have a view on this. Mohit from Ludhiana has got 2,000 shares of Trident Limited, which he bought at levels of 3.9. The stock is currently trading at 43.5. So he's making a considerable amount of money on this one. He's got an outlook for the next 2 years. This is one of those stocks sort of that has gained quite substantially. I'm looking at the longer term chart, and I see that over the last 1 year or so, it has gained about 30-odd%, right? So do you have specific coverage? If so, what should he do? Should he keep this money invested, or should he take some money off the table?
And the fortunes seems to be changing for the textile industry, and markets are pricing in that exactly. The stock has already witnessed strong re-rating. I think if you have a 2 years kind of view, then you can surely hold this company. I mean, this stock. I think the numbers will improve going forward. But since you are making so much gains, I think a lot of rally has already been there in a short span. So it is better to take some money off the table and be long with the rest.
Understood. Swati, I'll come to you very quickly then. If the view is to take some money off the table, what is a good selling opportunity according to you? What are the key levels to watch out for?
I think the overall chart setup is really positive. Looking towards the monthly formation, I believe that the stock has a potential to reach up to 60 to 65 levels. On a monthly basis, as such, I am witnessing that the 35 levels is acting as a very strong, crucial support level. So by keeping a 32 rupees, 35 rupees as a profit stop loss, he can carry the long position for immediate target of 60 to 65 levels on high side.
All right. Next up, we're talking about Nuvama Wealth. This one's from Amit, and he wants a longer term view on this, and he wants to know the buying levels. Saurabh, could you give us buying levels on this one? It's on a downtick today, down about 0.5% at this juncture.
Won't be able to give buying levels. I think it is better to seek technical view.
Overall, fundamentally, how do you see the stock going? I'm saying this because it's a recent listing, not a lot of data on the technical front there.
Yeah, I mean, it's not in coverage. I think it is better to wait for a quarter or two, how the earnings will plan out and how what the management is guiding. So then only I think we can make view. So as of now, it is not in coverage.
So then let me ask you this, Saurabh. On the fundamentals, those plays that are related to the capital markets, and we've seen quite a few of them run up very substantially, not least of which you've seen the BSE itself that has gone up from strength to strength. You have the likes of Angel One. You have a few other stocks as well. CAMS, I guess, is another play. What, according to you, is the best way to play this capital market theme?
I think this is the place where, a lot of turnover is happening, a lot of growth is happening, but at the same time, the competition is also coming up, which is leading to contraction in the margins. If you look at the Angel numbers, we saw the contraction in the operating profit margin, and the management is saying that they'll be able to overcome those. But I don't think so, and I think this is the space which is overly high. If you look at the valuation, say, of the BSE Angel, they are on the higher side. I mean, we haven't seen such kind of valuations in a long span. So I think if you are betting on this space, I think you should have a very long view, I'd say 3 to 5 years. And and the market corrections are looking in 2024. It looks that market will see a good amount of correction, considering the fact that we have seen long run up in the small and mid cap stock. And if that happens, I think we may see de-rating in the valuation of these companies.
Okay, fair point. I'm coming back to you, and again, I'm hopeful that you have a view on this one, because it is a question that is being asked about an InvIT. This is Power Grid Infrastructure Trust. And the question is coming from Sunil Taneja. He says that he's a pensioner and he's bought at levels of 121. He's invested 4 lakh rupees. I guess with the expectation of receiving regular income, because that I would assume is a theme that you play with regard to REITs as well as InvITs, right? Fractional ownership. So do you have a view, Saurabh, on this one?
I think largely, usually people buy these InvITs with a view of fixed income type gains, and there is also some tax incentives in these types of incomes. So largely, it is a good company. I mean, the parentage is Power Grid only, and this InvIT is good enough. I mean, there is no problem with this InvIT, and the income is likely to grow. And if the asset prices do go up, then we may see the market price of the InvIT going up. So I think he can remain invested.
So a quick clarification here, Saurabh. If you're not getting that capital appreciation, it's not something to be too worried about or bothered by, right? Because you're ultimately looking for the regular income.
Yeah, I mean, the capital appreciation is actually icing on the cake.
Sure.
All right. Next up, we're talking about 2 stocks. This one's from Subha Reddy, and we're talking about SBI that they've bought at 650, which is higher than the current price, and Newgen at 840 levels. Swati, for the shorter term view, would you suggest holding on to both of these stocks?
See, SBI is definitely one of the very good counter, and one should be holding into their portfolio. If he is looking for a longer term horizon, at least for a 1 to 2 years, definitely this counter is likely to perform and will test the feet of a 700 to 800 levels target I'm looking for. So SBI can be held at the current market price as well. If you're getting any downturn towards the 570 to 550 levels, one can add on so that the average price will come down. And I'm looking for a target of 750 to 800 levels on high side. Talking about the new gens, this particular stock is as of now well placed above all the important moving averages, whatever we look on the technical front, that is 50, 100 and 200 DMA. As long as it's hold 800 levels on the downside, definitely one should hold their long positions. So by keeping a stop loss of 800 rupees, I'm looking for a target of at least 840 to 850 levels for a shorter term perspective as such.
Got it. I do want to get a quick view on SBI from Saurabh as well. A lot has been said about the banking pack. In fact, you saw significant selling in the counter yesterday. Not really any specific trigger on SBI, but I think the entire banking pack was being sold into. So if I look at the one-year chart, it's not gone anywhere. And so therefore, from that perspective, based on the expectation of the growth that you're seeing in the lending book and the prospects for FY25 as well as you look forward, would you buy this counter right now?
I don't think so. If you look at the SBI, it is clearly underperformed both Nifty, Bank Nifty, and PSU Bank Index also. I think the market is of the opinion that the numbers will be muted this time. I think it is better to wait for the December quarterly numbers and then make our opinion. In the PSU baskets, the stocks which we like are Union Bank and the Cantor.
Fair point. All right. So aggressive view based on the technicals, but hold your horses based on the fundamentals is what Saurabh is saying on SBI. We'll see soon enough, though. The numbers are not too far away. Let's talk about a scheme by the government or a program by the government that will likely lead to a lot of beneficiaries on the corporate side, on the manufacturing side, and on the design side. I'm talking about the Kavach program of the government, right? There was, of course, an unfortunate incident last year that led to the government pushing the Kavach program. Geeta is wondering which stocks stand to benefit, and I think we've had a little time to understand this scheme and what it entails. Saurabh, any view about stocks that will stand to benefit from this program?
Didn't really seen this scheme.
Okay, so then let me broaden this. The Kavach scheme, of course, is aimed at the safety of the railways, right? And to prevent accidents and to ensure that things go in order. So let me broaden this then. Beyond the Kavach scheme, talking about railways, you saw some of those stocks take a bit of a beating yesterday. But remember, a lot of these stocks have gained very substantially over the last year or so. Which, according to you, Saurabh, is the one to bet on?
I think when these types of schemes are on the anvil, I think markets always tries to capture in that prices, and we have already seen that. I think when it's like when the metro is announced, property prices goes up, and when the metro comes, property price actually don't go up and may even come off. It's like in the stock market also. So I don't think so. I don't feel so. There is any kind of a juice left in those spaces.
All right. Let's shift focus to Aavas Financiers. This one's from Sid, and he wants a longer-term view on this. Now, in the last 1 year, the stock has lost 18%. For the longer term, Saurabh, how does it look, Aavas Financiers?
I think on the finance, on the NBFCs, I think there will be a pressure on the net interest margin. And this is a very small company. And I think the valuations are on the higher side. It is better to look how the numbers pan out for the December quarter and what the management guides. Then only I think it is better to decide. Otherwise, there is a lot of competition coming in this space. So my sense, it is better to avoid as of now.
Avoid is the call on Aavas Financiers. We have to slip into a very quick break. Viewers, we'll be back on the other side to take more queries, so do stay tuned.
Welcome back. You're watching Ask Profit. And before we continue the show, I'd like to remind you that you can write to us on any of our social media channels or on the WhatsApp number that's flashing on your screen or will flash on your screen in a couple of minutes. Or you can write to us on the YouTube live chat as well. Now, let's talk about Divi's Labs. This one's from Babu. And they say they bought the stock 25 years ago and they've been holding on to it since then. So now the purchase price is now negligible at this point. He wants to know the longer term view on this. Saurabh, now we've seen a little bit of weakness in Divi's Labs. But for a longer term, would you suggest holding on to this one?
I think a lot of activity is happening in the pharma space. I think we saw Cipla numbers and the other companies coming up with the numbers. I think Divi's is a company which can do well for the long term since he's invested for the last 25 years. In my opinion, I think he should stay invested because the competition in the American market is also going down. I think there is a deficit, there is a scarcity of some kind of medicines also. The company is in the APIs, intermediaries, and generics, and I think it is likely to do well. So my sense is that it is better to stay invested.
Right, fair enough. All right, that's a view on Divi's. And by the way, in case you're wondering, the buy price was likely in the single digits. If it is the maximum time frame, which is around the early 2000s, it is around 9 rupees or thereabouts that Babu probably acquired it at. Tata Elxsi is the next counter that we're looking at. Swati, this question's for you. Rinesh is asking. He's bought 7 shares at a price of about 6,000 rupees and he's looking for a view for the next 6 months. What would you say that he should do?
See, as of now, the stock is under correction mode. We have seen that in the last 5 to 4 previous trading sessions, the stock has given the breakdown of 20 days moving average. And from there onwards, one side we are witnessing a fall. I believe this fall is likely to be extended towards to 7,500 to 7,600 levels. Up to that level, we can witness a fall. And there onwards, we can see some sort of a reversal, which might again take us stocks towards to 84 to 8,500 levels on the downside. So as of now, for a very short-term perspective, the view is a little bit cautious. I believe that a stock will take a support nearby 7,600 to 7,500. There onwards, we will witness some sort of a pullback rally towards to 8,500 will be to my first target, and from there onwards, 9,000 levels can be tested. So the overall view is for the current period is a little bit cautious, but for a longer term horizon, definitely it's a positive, and we can witness some sort of a buying in this particular stock on every dips.
All right. Next up, we have a question from Raghunandan from Tamil Nadu. And he wants to know what stocks he should buy. So, Swati, based on the texture of the market today, what stocks do you have a buy call on?
Yeah, I would like to give a buy call on two buy calls at the current level. Sun Pharma is really looks good on the technical front. This particular counter is just really doing very well. And in the yesterday's market also, we have seen a very good bounce back rally. It will act as a defensive counter. Currently, the stock is trading at 1380 levels. No wonder it's trading at a higher level, but at least 20-30% can be taken a buy call at the CMP. And any dips to come towards to 1320, I believe it will be a good enough opportunity to take a buy call. Downside, it has a very good support at around 1250 levels. So one can hold their long position. I'm looking for a target of 1600 to 1700 levels on the high side. Another counter is the Indus Tower. This particular stock is also really doing very well. In this kind of a market, on the monthly chart, the stock has given the cup and handle formations breakout, and for non-stop, it's really doing very well from 210 levels. At the current market price, one can also take a long position. 231 is the current CMP. 210 is the immediate support level. So one can keep a stop loss of 210 and take a buy call for immediate target of 270 to 280 levels on high side.
Got it. Okay, so Senthil's asking this next question, and look, I think it's important to address this as well. He's asking about penny stocks. Sort of, a few of these names have done incredibly well, and I guess to a certain extent that is driving the appetite for them, but it's a dangerous game to play, right? Suzlon, for example, made a tremendous recovery, and if you think about it, Vodafone Idea has also made a tremendous recovery from the low point, right? But can you very quickly in 30 seconds explain why it's not necessarily a winning game?
I think it is largely the gains in the penny stocks comes when there is a gush of liquidity chasing, markets. A lot of money is coming to the riskier assets, and there is a huge volatility in small companies' business profiles. For example, as you said, Suzlon. I think Suzlon, there is some kind of a change in the operation metrics. I think company is improving its financials. The debt got restructured. The business prospects are improving, and that is why we saw the stock re-rated. But on the other side, Vodafone Idea, I don't think so. Fortune can ever change for this company. The balance sheet is too heavy, the debt is too high, and the company is making less money and the ARPU is losing its customers. So I think it is a very difficult game to play. It only looks rosy at the screen, but when you jump into, you can lose all your.
Yeah, fair point. Because while the gains might be substantial, just a 20% or a 30% drop would mean that a lot of your gains are wiped out, right? Let's talk about South Indian Bank then, because Senthil is asking about a specific view, Swati, on South Indian Bank for less than a year. Would you suggest a fresh entry at this price?
See, already the bank has given a very good rally from 26 to 33 levels. I will not suggest to take a buy call at the current market price, but definitely it's one of the very good stock which can perform very well in the future as well. If you're getting any dips towards between 30 to 28 level, one can take a long position because at that level, the risk reward will be a favorable. Downside 24 level is acting as a very strong support level. So one can take a long position, any dips towards between the range of 28 to 30. I'm looking for a target of 45 to 50 levels on high side.
All right. Next up, we have a question on IDFC First Bank by V. Srinavaslu. I hope I'm saying that correctly. They bought the stock at 87, which is higher than the current price. Saurabh, would you suggest holding on to this one?
I think if you are there for the long term, it's a hold. Otherwise, there is a good amount of correction can come in the stocks because the stock has already got re-rated in the last 1 year. So you have to stay put for long term.
Okay, all right. Thanks, Saurabh, for that view and indeed for answering all the questions that you did. Swati as well, thank you for joining us on this program. Viewers, if we weren't able to answer your specific question at the very least, hopefully the answers that were given to the other questions have benefited you in some way. A few of you, I've promised that I will take your question tomorrow. Remember, we're back tomorrow at 11:30 and we'll take all of your questions live. That's the end of this particular program from Smriti and myself and the team that put the show together. Thank you so much for watching. Do stay tuned. Lots more coming up on NDTV Profit.